Tax evasion vs tax avoidance. It's an important question that keeps coming back year after year. When taxpayers obey, the system works. But what happens when they don't? The law then meets two very different but equally damaging behaviors: tax evasion and tax avoidance. One is illegal, the other technically legal but ethically questionable. Let's decode both. Let's start with tax evasion. It's not a mistake, it's a deliberate act, suppressing income, inflating expenses, cooking the books. This is fraud, and the Income Tax Act treats it as a crime. Examples: fake invoices, 2 sets of books, undisclosed foreign income. It's done to cheat the system, and it carries serious consequences. Laws against evasion. Section 270A imposes a penalty up to 200% of the tax misreported. Section 276C that could land you in jail up to 7 years, and if you don't even file your return, that's Section 276CC, a criminal offence too. Indian courts are clear. You need intent to be guilty. As the Supreme Court said in Suresh Chandra Mittal, concealment must be deliberate. Now let's talk about the other side. Tax avoidance. Here the taxpayer doesn't break the law, but they bend it. It's about exploiting loopholes to reduce tax without technically violating any rules. Routing funds through tax havens, setting up shell companies. It's legal, but it defeats the intent of the law, and India's courts aren't amused. In the landmark case of McDowell and Company, West CTO, the Supreme Court drew the line. Tax planning is fine, but colorable devices not acceptable. Translation: you can plan your taxes, but you can't manipulate the law. But that's where GAAR comes in. Let's put them side by side. Tax evasion and tax avoidance. The difference? It's just not legal. It's philosophical. First, legality. Tax evasion is always illegal. It's cheating the law, plain and simple. Tax avoidance, legal, but still questionable. It bends the rules without breaking them. Second, the method. Evasion means lies, false invoices, hidden income, cooked up accounts. Avoidance, it's clever, exploiting loopholes, treaty shopping, shifting profits. The first breaks the system, the second games it. Third, penalty. Evasion attracts penalties, big ones. Section 270A hits you with double tax. Section 276C, jail time. Avoidance, no jail, but your tax benefits can be denied under GAAR. And finally, the burden of proof. In evasion, the burden is on the department. They must prove fraud. In avoidance, you, the taxpayer, must show the arrangement had real commercial substance. And if you can't, you lose the benefit. In short, evasion is a crime, avoidance is a tactic. Both, if unchecked, bleed the economy dry. Now that you have understood the concept, it's time to see how this is written in the exam. I have added the complete answer. Pause here, take screenshots, or better save this for revision. If this helped you prepare for your tax law exam, don't forget to like, share and subscribe. And if you're studying late tonight, play this again, let it sink in. This is Law in 2 Minutes, helping you learn smarter, not harder.